All right, welcome everybody. You should be able to see the screen okay, and sound should be all right. All good? All right. Excellent. Let's get started. So the purpose of today's information is to really talk about increasing your winning percentage. If you read the title of today's event, it's really about increasing your winning percentage in the Forex markets. So there's if I were to pick kind of three things that would help me do that more than anything else, from my experience, it's the three things you see here on the British pound chart. And we'll dive into each one of these. But before we get into that, a couple things. First of all, a strong winning percentage, for those that are new to trading, that's not the most important number. In fact, I'm just going to be honest with you and tell you that the one person that I know that's made the most money actually, trading, like really trading for a living, had a pretty poor winning percentage, but he had some enormous winners. Now, I would not teach anybody to do it the way he did, and I don't even know that he can teach anybody to do it the way he did. I wouldn't be able to. I don't know if I'd be able to do what he did, but so my point is a strong winning percentage is what it's a big psychology thing, because everybody wants a strong winning percentage. They want to be right all the time. As people, as human beings, we want to be right. Who wants to be wrong? We don't ever want to be wrong. Yet in trading, just like if you own a casino, you're going to lose. You can work losing into the model, and it doesn't matter. Does that make sense? If you think about the way a casino runs, they lose every minute. They're always losing. They win some bets, they lose some bets, but at the end, they know that they've set up the game so that the odds are stacked in their favor. That's exactly what we want to do as a trader. We know we're going to win, we know we're going to lose, but we want to set up the strategy so that if all we do is execute the strategy without thinking, in the end, we're going to come out ahead. Does that make sense? Having said that, I know most people want a really, really strong winning percentage. So do I, and that's great. So let's talk about it. And so a couple of these we may have talked about in the past, but I think the first one is something that we have not discussed. So let's start with that one. First of all, this all starts with identifying supply and demand levels. So if anyone's new to the group here, we do things a little bit different. We don't, we're not, when we're looking for turning points. I'm trying to think of a quick way to say this. Market timing, the ability to know where the market's going to turn before it turns with a very high degree of accuracy. The ability to know where the market's going to go before it goes there with a very high degree of accuracy. Okay, so that's what we're doing here, and to do that, we are not using anything from conventional technical analysis. That school of thought, there are many flaws with that school of thought that we talk about here sometimes. Instead, what we're looking at is the price action and the picture that represents real willing demand and real willing supply in a chart. Make sure you understand that's very different from the word support and resistance. So we'll get a little bit more into that as we go along. So once we've identified supply level, for those that have been with us, you know exactly what I'm talking about. So in the pound this morning, anybody get this trade? We had this here. We've been watching it kind of all morning. Anybody get this one in the pound, short-term trade? This is kind of a textbook trade for us. Hold tight, you're in it. Nice job identifying that level. Hold tight. Did you take it in the spot or the futures? Sindhu, nice. So you guys are doing good. Excellent. All right. Good stuff. Excellent. Good stuff. Yeah, we're going to talk about the dollar in a bit, 1FX. So glad to see that you guys are learning and taking some of these trades off these levels. Yeah, that was a nice one. But here's the thing. So with this number one, larger PF than you're looking for. PF, okay, actually, that's wrong. That should be PM. Let me fix that. Sorry about that. Hold on a second. Sorry. Apologize. Larger PM than you're looking. There we go. So PM stands for profit margin. Remember, how we make money buying and selling anything in life is exactly how we make money trading. So larger profit margin than we're looking for, that's a big one there. Okay. All right. Let me just grab the picture again. Okay. Yeah. So Humrai, I see you're kind of new. One of the things I would suggest you do, Humrai, go look at listen to some of the recordings. There's plenty on FX Street's website. There's plenty on the Online Trading Academy website. Okay. So all right. Yeah, the yen I think had one as well this morning, right? We'll take a look. So this first one, larger profit margin than you're looking for. So what we're talking about there is, look, if you want to increase your winning percentage, if you're looking for 2-to-1, meaning risking 1 to make 2, make sure that the chart is offering you 3-to-1. Always make sure the chart is offering you more than what you're looking for, and that will help you increase your winning percentage. Does that make sense? So let's say you're looking at 4-to-1 out of a trade. Well, make sure that the chart is offering at least 5-to-1 or 6-to-1. You decide. Does that make sense? Okay. So make sure that the chart is actually offering you more than what you're looking for. For example, this pound is moving, is really dropping. And if you look over here on the 30-minute, there's really not a whole lot to stop it from dropping until it gets down to here. And we'll map out a level down here. Okay. But one thing we can do, I want to take this another step deeper. So does everybody see, let's see, do you see my pointer here? So we've got our base and our drop. That's what creates the supply level here. Okay? Remember, the fact that prices dropped out of this level tells us that supply exceeds demand here. That's the big stack of orders on the trade desk that we always talk about. This is where the banks and institutions have their orders. So, but this initial drop in price, let's focus on this for a moment, because what this does is tell us once this drop in price happens, in other words, once prices come back to the level, we know the lowest low that was created between the time that the level was created and when price came back to the level. Make sense? So we know what that lowest low is. This lowest low tells us where the kind of the easiest money, what the initial profit margin is for us, what the initial profit zone is for us, right? In other words, when price comes back for the entry here, we know that there's no significant demand until this 158 right around 70 low or lower. Okay, does everybody understand that? There really can't be, right? And the logic, the reason we know that is because if there was demand higher, price never would have been able to fall all the way down to this 158.70. So when price comes back up for entry, which some of you have taken, nice job, we're usually good for a move back down to at least this low, and then of course lower. Okay. All right, and then we'd have to look to the left to see where the demand is below that. But so if we determine that, so if we say, you know what, okay, we now, based on the time that, based on when this trade meant entry, we know we're pretty good. The odds are pretty good that you're going to come down to here, because these sellers that, the sellers or supply that sold in this drop absorbed all the significant demand, at least down to this level, but no lower, right? Okay. So, therefore, if we feel we're pretty good to this level, okay, what you might want to do is consider taking profit a bit earlier. You see what I'm saying? Take it before that area. In fact, let me make this the blue line, right here. Give me just a moment. Little cable problem there. Had to fix it. Okay. So just want to make sure we're all clear on this. So the fact that price dropped down to where this black line is, which the black line has nothing to do with it. I'm just marking off the low of the move. Remember, for those that live, say, in anybody live in the north where it snows? Anybody, see snow? I live in Chicago, born and raised in Chicago. And, in the winters when it snows a lot, in the morning you want to drive down the main roads because they've been, the snow plows remove the snow there first. You stay away from the side roads. Well, that's exactly what's happening right here. Okay? This is the snowplow effect down here. In other words, all the kind of the pioneer sellers here are absorbing. They're doing all the dirty work for us. For those of you that actually took this trade here, these guys did the dirty work for you, so you should send them a thank you note. In other words, they absorbed all the significant demand until this low, right? And then obviously there was some kind of demand here, and then price shot up, which we wanted for our short entry right here. But so if we have evidence that this is where the demand is, then consider getting out before the demand. In other words, let's say this is 4-to-1 here. Okay, put your target at 3-to-1. Make sense? You're going to have here's your entry. I'll circle that, and this would be your target. So let me just capture that picture again for you. And this is a big thing. It may not seem like a big thing, but again, if you want to increase your winning percentage, this is a pretty good way to do it. All right. So yeah, so top circle would be the entry that I know a bunch of you took, and the bottom circle would be your exit. Now, the downside to doing this, you're going to get a lot of winners, but you're going to miss out on some bigger profits, right? Remember, there's an upside and a downside to all this stuff, right? So you just have to balance that out and do what you're comfortable doing. For me, what I like to do is one thing to consider is potentially taking money off the table here and moving my stop. Sometimes move my stop to break even, but not usually. But you can. In other words, you can take some profit here, move your stop to break even on the rest, things like that. Okay, but for the most part, I like going for a little bit bigger move. Okay. Yeah. So Brian from I think you're saying Singapore there, which I'll be in Singapore I think in April. How do you know the trade's coming beforehand? Once the supply level is created, and again, if you're new to the session, try to go back and watch some of those recordings. Yeah, you want to know where you're at in the big picture there too. So we're gonna map that out in a moment, right? So base drop here, that's our supply level. We sell short here. We take the pivot low, the lowest low prior to the entry, and put your target above that. Now, again, this is a scenario where the chart is probably offering you the move from the supply level to the black line, but take your profit a little early before that. You're just going to have a much easier time getting filled. So now let's map out a trade that hasn't happened yet. Okay, so let's map out a trade that hasn't happened yet. And let's go to this chart. I'll just do it over here on the bottom. Okay, so obviously when we look at any of the larger time frames, the pound has just been rallying. It's actually up into it's now reached a price level where it's probably going to run into quite a bit of trouble up there. Now, there is short-term trading opportunity on potentially on the upside. We may be able to get something out of this. So let's mark a level off here. Let me just put a level in. This level down here at 158 looks like it's going to come in around 30. I'm just going to draw these lines in, and then I'll share it with you. All right, let me grab the picture again. So here's a trade that can very easily meet entry, this morning. There we go. Haley, yeah, do I find there's a difference between the spot and futures charts? The mechanics of the trading, internally are different for sure. Yeah, Carlos, you want to take that's kind of number 2 that we're going to go over. Make sure you're trading fresh levels. So that's I think what you're talking about there. Yeah, the first pullback into a level is when you want to take the trade. Okay. All right, so take a look. So here's a little area of demand. Okay, and we see. So let's just apply the same logic that we did on the short that happened this morning. So we see the highest high right here of the move is right here. Now price could turn higher, but right now our highest high is just above 159.20, right? Okay, about 159.28. So here's our level. Here's where there's likely to be some supply. So if we calculate and figure this is, I don't know, we can just eyeball it and say maybe 4 to 1. I could put my profit at 3 to 1 or 2 to 1, and the odds of me reaching my target are enormous. Okay, so if we look, let's look here. All right, so if this is I think it's around what, 13 ticks here. Let's see. Okay. All right, so we're looking for, let's see. So we're looking for about, let's see. Where does 64 come in? Right about there. So let me put this line in, and I'll explain why I'm putting it here. So right there is about 2 to 1, and I'll take the picture again for you. Let me explain this. Yuri, I'm kind of reading back and trying to get some of these questions. Sorry, I know I'm missing some, but yeah, that's it's important when the level is created. Absolutely, that's another odds enhancer that we go over. Alex, both, but you want to make sure it's fresh. Okay. Yeah, Scott. So Scott's making a good point, and I was just about to get to that. Isn't this level too high on the curve? Given that on the daily, weekly, we're kind of up into that larger time frame supply now. Okay. So because I know that price was able to go up to here, just above 159.20. In other words, the initial rally out of this demand level took price up to this highest high. And so, let me see here. Trying trader, yeah, I see what you're saying there. I would say you don't have to be pretty good at placing your stops. Yeah, you have to put in the right spot. What you have to be good at is placing is identifying your levels, because your best levels, if you're picking the right levels, much of the time, what happened in this British pound short is going to happen. It's not often that you're going to just peak right, go through the level and then turn. If that's happening, then the issue is picking the right levels. Okay. Anyway, so take a look over here in the lower left corner, the 30-minute chart. So the fact that price was able to go all the way up to this high means that, and the fact that we're high on the curve means that, this blue line represents 2 to 1. So if price hits this level, I should have a pretty easy time achieving 2 to 1 in this. Does that make sense? Okay. You don't have to go for a giant move. When I take in those considerations, where's price in the big picture and what is the chart offering me? So it looks like the chart is offering me almost 5 to 1, right? This is 2 to 1, so if you double this, add a little bit. The chart's offering me about, this highest high means that this demand level is offering about 4 or 5 to 1. So there's 2 to 1. I can increase this to 3 to 1. I probably wouldn't go more than that. All right. Does that make sense? Okay. All right. So let's leave that one alone. And so let me just kind of wrap up this first one, larger profit margin than you're looking for. Okay. So again, a lot of people think they find a demand or support level and they see where the supply or resistance is. And they're trying to capture that whole move. If you want to increase your winning percentage, don't try to capture the whole move. Again, if that picture is offering you 5 to 1, go for 3 or 4 to 1. Your winning percentage should go up dramatically. All right, number 2, fresh levels. This one is key. Okay, this one is absolutely key. One thing this supply level had going for it up here this morning was that it was fresh, meaning. And by the way, those of you who took that trade, any of you still in it? Are any of you still in that trade? I know some people are short the pound from up here. Very nice, very nice. Okay. All right. So Trademeyer, you notice how we have a new supply level that just formed here? Okay, let me just do this. Yeah, so you see how we have a new supply level that just formed right here? What you may want to do is move your stop down now to just above this new supply level. Okay, so the top of the level, 158.60, about 67, right? So if you moved it down to, 69.70, you're, you know what I mean? It's not a bad idea. And the logic behind that is, if this is going to keep falling, okay, which again, larger time frame, we're into a, you know, you shorted, you found a small, you lined up a small time frame level with a larger time frame level. That's golden. It doesn't get any better than that, right? We talked about that. Yeah, so, you know, if this is going to keep falling, it should hit this new supply level and continue down, which means you're still in the trade. And if it goes through it, you know, it's probably going to go, this is just a 5-minute chart and it's the pound, so it could go significantly higher. All right. Yeah, so Alstock, if your ultimate target, you know, is down here or wherever it is, I'm just saying if you're still in this and trying to manage it for a bigger move, because if you look at the 180-minute chart, right, it's the same level on this 30, but there's really nothing to stop this till you get down to this area down here. Okay, this demand level we drew in, there's not a whole lot to stop the pound from falling until it gets down to, you know, pretty close to here. Okay, which it's kind of almost there. All right, anyway, but fresh level. So what does a fresh level look like? When we say fresh level, we mean once the level was created, let me take this picture again. Once that level is created, like you see here, until price comes back to that level, we say the level is fresh. Now, if you think about the trading books all say the same thing. They say if you, you know, don't take the first pullback into a level because, you know, you don't know if there's any buyers or sellers there. Instead, you know, let the level be tested a few times. That's like what's written in every book about support resistance, right? Well, if you think the logic through, I think you're going to find that the opposite is true. Yes, confirmation is a very dangerous word in trading. People love it until they try it. If you think the logic through, remember, I started my career on the floor of the Chicago Mercantile Exchange handling institutional order flow in the currency. So I was on the institution side of this business. And what I'm showing you here, every session we have, is the picture that represents real institutional supply and demand in the Forex markets. Make sense? Okay. So, and if you think about how that works, every time price came back to a price level where we had a lot of buy or sell orders, what's going to happen to that stack of orders? Is it going to increase or decrease? Well, it's decreasing, right? Okay. So what we want to do to take the high probability trade, we want to make sure that we take the first pullback into that level. So right now, this level is fresh until that first pullback. Once you have that first pullback, the level is not fresh anymore. Now, it's a little bit deeper than that. Okay. You just had some on a euro. Let's see. I saw some other people talking about that. And I actually got a little message on it. I'm just curious. Let's see. Did you get a Rob, profit margin? Gotcha. So you shorted into this one, Alex? Yeah, the euro's interesting because I'll show you why. By the way, if you're just like a trader, in other words, let me show you something here. Well, while we're on the euro, just real quickly, I know we're kind of bouncing around here, but the euro has a fantastic level here on the larger time frame. Okay? See how we just ran right up against this supply? And obviously, I didn't just draw this level in, I just pulled the chart up. So here's some supply that we're just hitting above here. Okay. Right? Yeah, institutional supply right up here. But be careful because when we come down to say a smaller time frame, watch this. Just be careful. I mean, I think there's just great opportunity in the euro, but here's the other picture I want to show you. So now I just brought this down to the daily chart. So if you take a look, you'll see, yeah, we just hit supply, and we can certainly go a little bit deeper, and I hope we do because, you know, you get a better short off, but there's a huge base of demand sitting just below. So if you're someone who, you're only going to hear me say this once. You probably never heard me say this before, but if you're someone that likes to use oscillators, you know, oscillators on a larger time frame are probably going to be a pretty fun tool over the next few days in the euro. You're likely to move from this area of supply down into this big area of demand and back up again and back down again. You know, you've got two big levels sitting on top of each other. I'm not suggesting you should use oscillators, but if you're good at identifying the levels, the next 24, 48 hours, you're probably likely to get, you know, moves from area to area. See this area I'm pointing to here? Okay. So it should be pretty fun. We'll see how it works out. All right, let me go back to our British pound. That. Okay. Yeah, so Maurice, yeah, we've been going over the pound pretty much the whole session. We spent the whole time on the pound. All right. Oh, yeah, so number one, larger profit margin than you're looking for. Number two, make sure the level is fresh, meaning identify a level that has had no pullbacks, okay? Because with each successive pullback, that supply or demand is decreasing. Okay, makes sense? Number three, key correlations. So I saw a couple people asking about the dollar. That's what we'll bring the dollar in right now. So I want to bring up another workspace that I don't know that I've ever brought up I bring it up in the trading rooms at Online Trading Academy in the XLT. Let me share it with you here. So there, I just took a picture. You should be able to see. Can you see 8 charts? Is that what you're looking at? I'm not sure what you're looking at. Well, you should be able to see 8 charts. Okay, great. So this is a you see on the bottom there it says AAM correlations, right? I actually spelled it wrong on the other one, but so yeah, so this is something you really want to watch for. This is really key key stuff here. This is a chart I look at every day. I've got it, and you would do this this is the larger time frame setup, and then I have a smaller time frame setup. So it's got a daily chart of the dollar here, U.S. dollar, on top of the weekly chart of U.S. dollar. And then I've got a daily S&P on top of a weekly S&P, a daily euro on top of a weekly euro, and then over here we've got the bonds, okay? Daily bonds on top of a weekly bond chart with not a lot of lines in it. Right? So this is something I take a quick peek at every day. If I'm, you know, I'll take a look at the larger time frame, the larger picture each day. But also, if you're going to do this for short-term trading, you know, you probably have something like the top charts be 60-minute charts or 30-minute charts, and the bottom charts be 5-minute charts. Make sense? Okay, and you clearly would have picked up that pound trade today that we found. Harley, that's actually the 10-year note I have up there, not the 30-year. You can look at either one, but I choose to use the 10-year. So these correlations are key. The big obvious one is the dollar and euro, right? So the dollar hitting some larger time frame demand today, and what's nice is we're going a little bit deep into it, a little deeper into it than we have been, which is nice. So at the same time the dollar is hitting demand, euro hitting supply. That trade someone just took on the 1 minute, that short, it probably was a pretty easy trade, right? Worked out pretty quick. That's because the larger time frames, you have the larger time frames in your favor and that key correlation. And at the same time, the euro's hitting supply here. The S&P is right up into its supply level and having a tough time there. Okay. Yeah, the pound level hit. Okay. And just full disclosure, I'm not taking that long pound, just because it is pretty high on the curve. Okay. So just want to let you know that. I try to always let you know the trades I'm in, and excellent trade, Meyer. Excellent. Yeah. So Coco is asking the question of all questions, right? That's the golden question. How do you pick how do you know when a level is going to hold or when it's not? Well, obviously, ultimately, you don't know what's going to happen in anything in life until after it happens, right? So all we can do is play the odds, and that's why identifying key supply and demand levels, which is not the purpose of today's session, is everything. So you've got to know, the odds enhancers, if you don't know the odds enhancers. And first and foremost, you have to know the picture that represents real demand and real supply. Okay? Now, when you know all that, the majority of your trades should work out. You should get very good at levels. In fact, I see some names in here. There's some people with us today that are pretty good at this. And watch this. For example, once you get good at it, it's my guess is that your problem is not going to be prices blowing through your levels. Your biggest challenge is going to be price not hitting your levels or getting very close to your levels and turning. Is anybody having that problem? Is that anybody having that as kind of your main problem, where price gets close to your level and then turns and you're not in it? Okay, so you see Revax as always. And a lot of people are saying yes very often. So this group that is typing back right now, they're very good at their levels. Their biggest problem is not price blowing through a level. So what the group that's typing back now has learned to do and is able to do is identify institutional supply and institutional demand. That's why you're having trouble getting filled, because you're now competing with the banks. Does everybody understand that? Okay. So, and again, I don't want to always just come in here and beat up the trading books. That's not my purpose at all. I just haven't found a really good way. I'm trying to figure out a really good way to convey the message that, there's the book version way of learning things. So you can learn the book version definition of support and resistance and all that stuff, but it's very basic, looking at pivot highs and pivot lows. Very flawed school of thought, because that's all in, those pivots are all just pullbacks into levels anyway. Or you can kind of forget about that school of thought and focus on the real picture that represents, institutional demand and institutional supply. And I know there's a bunch of new people with us, so to really get your feet wet in that, I strongly suggest you, you go and watch some of the recordings. Okay? The floor, Boyke, I never saw hardly anybody use charts on the floor. They didn't need to, because the orders were right there. Okay? So think about it, Boyke. If you're now where I was on the trade desk, the British pound was over to my left, and let's say, Boyke, you're in the British pound trading pit. So that was the currency futures at the CME, okay, which people still trade a lot today. They don't do it on the floor anymore. It's electronic now. But if you're standing in that trading pit, Boyke, what are you going to do if you're trading your own account? You're probably, what you're going to do is you're going to get down there every day. What are you paying? That seat costs you money. You probably paid a lot of money for that seat to be a member of the Chicago Mercantile Exchange or any exchange, right? So you're going to go in there. What are you paying for? Well, you're going to go in the British pound trading pit, and you're going to figure out who the big filling brokers are in there, right? And as soon as you do, and there's probably only going to be 2 or 3 of them that are really big at most, what you're probably going to do is you're just going to watch them. And as soon as you see that they have a big, that their clerk hands them a huge stack of orders, you don't know what those orders are until when? Until the first order is filled on the top of that big stack, that big deck, right? Now, once you see the broker fill one of those orders, now you know what all the orders are in the deck, or at least you know the price level. Does that make sense? So if you see that the broker just bought at whatever price, okay, and he fills out that top ticket, well, just look at, you see that he's got this massive stack of buy orders all at that price. Now what are you going to do? You're going to just buy at that price, or a tick above, right? Or a couple ticks above. You're going to be buying right there, because now you know where the floor is, thanks to the all those orders, the institutions, the banks, the money managers, right? The hedgers, everybody. Okay? Yeah, as Alstock is saying, you're going to lean on them. You're going to lean on that big stack of orders. You're going to lean around where all that demand is. So all I did, yeah, you need far-looking eyes. Well, you can stand close to him if you want to. Okay? So to make a long story short, what I did was I would bring, because I was fortunate enough to be handling a lot of those orders, especially some of the big ones. What I would do is I would bring a chart over to the trade desk, and I would mark off where those buy and sell orders were, right? The big stacks of orders, which was institutional demand, institutional supply, and I'd mark those levels off on a chart every day for a while, right? And so that picture, the picture on a chart that represents those orders, that's what I focus on here with you guys. And when you really dive into it and all the odds enhancers that go along with it, again, you see it's a very different picture than just conventional support and resistance. Okay. All right, let's move on. Let's take a look. Okay, yeah, the pound, yeah, we'll go back to the pound in a minute. Yeah, like I said, I'm not going to take that one. That was just an example of kind of where to put your, that whole, that number one, that profit margin issue. But again, very high on the curve there. Yeah, the play in the currencies. And again, I don't think you want to be buying anything against the dollar when the dollar is, you see how the dollar is sitting into this demand here? Everybody see that? The dollar is sitting into this demand here. I don't think you want to be buying any major currencies against it, like the yen, euro, pound, anything like that. Make sense? Okay. 134 is okay. Good question there, Andrea. I'm sorry, Trader X. So Trader X is saying, that's a great question. Why not 134 here? So Trader X, you're saying why not take this level right here? Okay. Well, the reason is because if you look, even the level I've picked out, it's not fresh. So you have base, drop, first pullback. Okay. The reason why I didn't go with this one, I like it. Structure-wise, it's nice. Okay, this level right here, or I guess specifically pretty tight right there. I like it. The problem is you've got all this stuff sitting just below. So that's why this would not become a level to us. Okay? Make sense? So if we put, let's do this. Instead of this S&P here, let's put a pound chart right against the dollar. So the dollar's down into demand. Okay. We don't want to be buying the pound until we get quite a bit lower on the curve. So the next place to buy this thing, or where would I be comfortable buying it? Oh, one more thing I wanted to say. I almost forgot. With that whole profit margin thing, if you're trading the currencies, make sure you've measured, before you take a trade in the currencies or in major currencies against the dollar, make sure you measure that same profit margin in the US dollar. Right? So if you're about to short the pound, like that trade this morning, make sure that the dollar is into some demand and that supply is not that close. Okay. Yeah, Boyke, the floor trader pivots, I'm not into those at all. I've never seen those really work for anybody, and I know how they're calculated. It's just a number. It's just a simple calculation. It has nothing to do with where the real orders are. Okay? Does that make sense? Yeah, Alstock, I agree with you. All right. One level that looks really good is this new supply level. I know we had this 5-minute level up here, but another level that I would strongly consider taking. Let me just take another quick look here. Yeah, now it looks even better now. Here's a level that I would short against. I'll always tell you the levels I would take or I'm in, and the ones that I would not. This is certainly one I would take. So let's map this one out. And I'm going to put this, I'm going to put that right there, that line, whoops, right there, okay. All right, and this one, because this is well placed on the larger time frame curve, let me grab the picture for you, sorry about that. Because this is well placed on the larger time frame supply-demand curve, okay, the supply level, because the dollar is into some demand, I like this trade, okay. So looking to sell short at 158.62 with a buy stop at, I would say, 71. Okay. I'll put a red line in here for the stop. Okay, so 62 on the entry, 71 on the stop. Let me grab the picture again for you. These trades, I'm kind of reading back Andrew, I think I understand what you're saying. These trades should work out fairly quickly because, again, what you're doing is you're entering at a price level where we're assuming supply and demand is out of balance. You know, we're looking for price levels where there's a big imbalance. Like the picture that I'm showing you here, this supply level, that picture suggests there's a big imbalance there, obviously on the supply side. So the trade should not just linger there. They should work out fairly quickly. So with the pound supply level up here, dollar having some demand down here, this is a trade that for me is worth the risk. Make sense? Yeah, Alstock, I'm sure you like this one. This is a gem. Yeah, let's take one other look. I saw a couple questions on the dollar. So let me just blow this up a little bit. Dollar's a little clunky right now, but take a look. It is into that big level. Here we go. Well, the big picture supply is actually quite a bit higher. I'll show you. I have it marked off already. Okay. Remember, we've hardly changed these dollar levels in God, it's been years, couple of years. So here's the next fresh supply level in the dollar. All right. Now the only let me take the picture again. Yeah. So Majak on that potential short we just mapped out. You know, I would look for a much bigger move on that because the larger time frames are offering that as well. So I'd probably look for at least 5-to-1 on that one. Okay. I would look for at least 5-to-1 on that one. So here's where the fresh, larger time frame supply is in the U.S. dollar. And let me make one more comment. I'm not in love with this demand that we're in right now. Okay? Not in love with this demand that we're in right now because this demand level, drop-based rally, is a pullback into the rally-based rally to the left. Make sense? Okay? So be careful with that. Okay, yeah, not fresh, exactly, Pip Runner. So I put my email address in the chat box there, sseiden@tradingacademy.com. That's sseiden@tradingacademy.com. So if you have any questions, I know we're kind of out of time here. If you have any questions, send me an email. Again, sseiden@tradingacademy.com. And hopefully that was helpful. So remember those 3 things to increase your winning percentage. That first one is a big one. The second one is crucial. And so is the third one. They're all important. And just keep it simple, you know. Don't focus on too much. This, simple is key here. All right. Have a great day, everybody. Thanks again for your time. We'll see you next time. Thanks, FX Street as well.